Good morning, good afternoon, good evening, wherever you are watching us from. My name is Rena Hicks. I'm the Operations Director at Faida Investment Bank, and we are here discussing Oak Fund. Oak Fund is one of the products that we have at Faida. We are licensed by the Capital Markets Authority. As you may know by now, we've done so much content, but today we want to just break it down. And I have with me Ian Kahangara, who's our Chief Investment Officer. And you know, we started this thing a few months ago, at least made it public a few months ago. We got our license in 2023. We're now in December 2024. And so we want to break down the performance that we've had so far so that you understand what have you guys been able to do. You came telling us many things. How have you done so far? That's why we are here today, to break it down simply so that you understand how we have performed and how did it actually happen. Karibu sana, Ian.
Thank you.
Maybe
Rena?
we can start with you,
Yes.
introducing yourself,
Okay.
and then telling us, this Oak Fund, what is it?
Okay. Thank you. I want to say Ian is a seasoned first commercial banker, then investment banker, spanning in a career for the last 16 years, basically, in the similar industry. As we come to demystify a fact sheet, because majority of the people have asked, can we get documentation? And we send this, and sometimes it's a lot of jargon for our investors, and that's why we are here today, to demystify so that they can understand each and every section of this fact sheet.
Yeah.
But the first thing I believe is defining what's a fact sheet. What is a fact sheet? And in my simple terms, I'll say it's just a concise and brief document that describes an offering. An offering can be in any investments or even a product or a service that one is offering. But in the financial terms, there are the few things that should be in a fact sheet so that immediately someone is able to read. It should be a one-pager or a two-pager. One is able to just get the overall view of what we are selling. And that's why we are here, to demystify each and every section of this.
Yeah.
Yeah.
So just for everyone to know, the fact sheet is a document that we send out. Right now, we're sending it out monthly, and it has various sections that break down who we are, what we've done, and the performance. So what we are going to do today is explain the November 2024 fact sheet. But before I go on, in case you have never heard about Oak Special Fund, allow me to break it down. Oak Special Fund is a product that we began because we realized, I particularly was like, you know, this thing of investing where you try and figure out, where do I invest my money? When do I sell? When do I buy? Where are the markets? Where are interest rates, inflation, exchange rates? It can be overwhelming for individuals. And so we started to work on a product that would help customers not have to think about where to invest their money, but rather have someone else to have that headache, so that we help you invest your money for you. So we have what is called a collective investment scheme. It's, in other terms, an umbrella scheme that is licensed by the Capital Markets Authority. We have three funds. We have the Oak Money Market Fund, we have an Oak Fixed Income Fund, and we have Oak Special Fund. So performance today, the one we're discussing, is the Oak Special Fund. It's called a special fund because that's the name that has been given by our Capital Markets Authority, because we invest in different products. We invest in stocks locally, stocks globally, we invest in derivatives, we invest in bonds, we invest in so many different things. So Ian will be talking a little bit about that. I'll not go into the details, but I just needed you to understand what Oak Special Fund is, and that's why we're here today. Okay, so let's start with this fact sheet. Yes, and I think perhaps just to describe the fund in terms of the strategy, maybe you can just speak about it a little bit, and how you decide what to invest in.
Okay, first I would like to say, what's Oak Special Fund, or what's a special fund as named by our Capital Markets Authority? Depending on the jurisdiction or area in the globe, you'll find similar products maybe going under the name hedge fund. You'll also find others call them mutual funds. But in essence, what we call a special fund here in Kenya is what you'd call an asset allocation fund or a multi-asset fund. So it's both an asset allocation fund or a multi-asset fund. And just to break it down, we are saying that this is a fund where it's open to place money in different asset classes. Asset classes are investment vehicles. So you are saying that you can maybe invest in a normal call deposit, you can invest in a bond, you can invest in maybe a pot where you trade, you buy and sell. Let's say you are buying and selling currencies. You can even place it in a vehicle that maybe deals with more complex instruments that we call derivatives. So what happens is, how much allocation do you put in each investment vehicle? And how much return do you get? And how much risk do you have in each investment vehicle? So that is what we are discussing when you go to Oak Special Fund.
Okay.
Yes.
So the returns, in fact, I saw these returns, by the way. I'm a customer. I was customer number 2. So as I carry on with my questions now, I'm going to remove my operations director hat and put on customer hat. Do you know, to be honest, Ian,
yes.
I looked at these returns, I said, oh my goodness, this is not a good thing.
Yes.
And the reason I said that is because 29.3%
yes.
from February this year. Like,
yes.
I'm like, can we sustain this? So my first question is on, how do we manage risk? Just in terms of risk management, because we want to optimize returns and give guys returns, but how are we managing the risk just so that we don't lose customers' money?
Okay. Actually, yes, we've been on a moderate growth rate for now. At the beginning, and that happens sometimes when you start a new fund and the funds, the asset under management, what we call AUM, is still low. Sometimes you are able to make above average returns. Yeah. Let me say above average returns. But are they sustainable? Maybe not to the extremes. However, and that's why we keep on saying that our target returns is 20% for now after fees. And that's why I say, as much as you look at our returns right now, have we done above our target? Yes, we've done above our target. Are we happy? Yes, we are happy. But we still stick to our targets, which is 20% after fees as at now. What happens, if I may give a good example, especially even people who trade with what we call online forex. They'll tell you easily, if you give them, let's say, $1,000, they tell you they can consistently maybe even make 5% or 10% in a month. They'll tell you that. And is it possible? Yes, it's possible with $1,000. But the question is, can you do it with $10,000? They'll say, okay, yes, I can. $100,000? Yes, I can. $1 million? Things change. How things change is the emotional part of it comes in. Because if you have $1,000 and for whatever reason you lose $10, psychologically, it's give or take 130 shillings. There is no emotional pain when you lose. But what percentage of the portfolio have you lost? It's actually 1%. If you lost 1% every day for 5 days, you see that is 5% of your portfolio. It's a huge percentage. But psychologically, you are able to say, okay, I lost $10, tomorrow I can recover $20. And that's how, when you have less capital, people are able to trade because of the psychology part of it. But however, as the AUM grows, you'll find that you have to mitigate the losses and you have to manage the psychological part of it. You can't just scale up directly. Okay. Yes.
Okay. So we've done 29.32% in November. But is it guaranteed? No, we're not guaranteeing. Yes. We're not guaranteeing returns, but we're going to work towards targeting a return of 20%. Yes. It doesn't mean that we'll also make less. We will not make less than 20. It's a target, because I think a question I've also received from many clients is, you are guaranteeing 20? We're not guaranteeing 20, but we're aiming to give you a return of 20. If we might, depending on the market, give less, but that is what we're targeting. Okay, so let's look at, you want to say something?
Yes, I wanted to add on that because I've also faced that. You're able to guarantee, and even people will tell you maybe someone else guaranteed. And you'll find, I usually say, it's good for everyone to be aware. Even the capital markets does not allow you to guarantee. But maybe a salesperson here or there in another place may have told you it's a guarantee. But if you go essentially to the product, you'll find that people don't guarantee, and they always say that results of the past does not assure you of future returns. Yeah. So just be aware of how the capital markets expects these products to be marketed, and also be aware that there is no guarantee, basically.
So maybe just to drill down more on this one, yeah?
Yes.
We've said we've gotten a return of 29.32%.
Yes.
What does that actually mean? If I had invested 1 million shillings, is it annualized, like for the whole year, if I had invested the whole year, or is it for the period I have invested?